Shares of AST SpaceMobile are down 25% since Wednesday and down closer to 30% since the last time I covered this company. Now, soon enough, there's going to be some exciting stuff happening with AST SpaceMobile. But as I mentioned in the last video, which was the only time I spoke about this company, was basically I did not understand how this company could be valued at $8.3 billion at that time. I still have that same question today. Plus also said that management should take this opportunity to raise cash. Yes, which would mean dilution. Nobody likes to hear that word. But if you raise cash at an extremely high valuation, and thanks to that, you can accelerate your roadmap, and then in return, your shares go up by 100%, 200%, 300%, I don't know, 10x in X amount of years. Who cares? Then some folks say, oh, but management said they're not going to dilute shareholders anymore, especially not this year. We don't need it, etc., etc. Again, when the market gives you such an opportunity, right, for your stock to be up in 3 months, 204%. Year to date, it's up closer to 343%. When the stock market gives you that, when you are barely generating $1 million a quarter, but you are worth over $8 billion, you as management, yes, you should take that opportunity to raise cash. And it's not bad. It's not bad at all. Plenty of companies have done it, and it's, in my opinion, a good move. Because you know very well that today you're not worth that much. And yet the stock market thinks, okay, you know what? It's an 8-point-something billion company. You as a CEO, CFO, whatever, you say, okay, great. We'll take this opportunity to raise a ton of cash that should help us in our future projects. Because remember, they don't really have that much money left, and their whole project will cost them closer to $5 billion. Of course, they can have agreements, partnerships with the likes of Google, Verizon, AT&T. Yeah, okay, fine, and many more in the future. But to me, this was a given. So let's talk about what has been happening in the last couple of days, because the stock went up a lot and then it went down quite a lot as well. I'm not short on this company. I am actually very excited for these types of companies to exist and to succeed because, one, I'm a big fan of space, and yes, I do think that direct-to-cell coverage is the next big thing, in my opinion. So let's discuss all of that in this video. If you like it, subscribe or hit the thumbs down. If you don't like it, doesn't matter. If you want to support me even further, do check out the link down in the description and in the pinned comment to get top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, let's start with the first good news. So AST SpaceMobile provides interim business update to confirm upcoming orbital launch and warrant redemption. So first things first, the launch of AST SpaceMobile's upcoming satellites is targeted on or after September 12 from Cape Canaveral, Florida, and over $155 million in proceeds is expected from its previously announced redemption of warrants, resulting in over $440 million in cash on a pro forma basis as of June 30, 2024. So of course, the fact that the target launch date has been confirmed and not changed or delayed was good news. Then they filed a prospectus. So the first thing that we've got was this here. They say here, from time to time in one or more series, we may offer to sell the securities identified above. So preferred stock, debt securities, depository shares, warrants, purchase contract, units, subscription rights. They continue by explaining a whole lot of things. After that, you've got a follow-up to that prospectus, and you've got basically this. So this agreement allows the company to sell up to $400 million worth of its shares to investors through various financial institutions. These shares will be sold on the stock market, and the price will be determined by the market's condition at the time of the sale. Now, we'll be asking the question, does this mean dilution for shareholders? Yes, it could. Dilution occurs when the total number of outstanding shares increases, which means each existing shareholder owns a smaller portion of the company. However, like I said at the start, if the company uses the proceeds to invest in projects that significantly increase its value, the dilution might be offset by the growth in the company's worth. They also add the usual stuff that you see in these types of filings. So the risks here, you may experience future dilution as a result of future equity offerings, and in light of our intense current and future capital needs, such dilution may be substantial. In order to execute our business plans, we will need significant amount of capital. We will incur significant expenses and capital expenditures in the near term and in the future to further our business plan and develop the SpaceMobile service, including expenses to design, develop, assemble, and launch our satellites, design and develop the components of the SpaceMobile service, etc., etc., etc. Because we will incur much of the cost and expenses from these efforts before we receive any revenues, our losses in the future periods will be significant. Also, we have in the past and may in the future find that these efforts are more expensive than we currently anticipate, as our business plan is dependent upon our ability to successfully launch satellites and build the SpaceMobile service, but also to control costs. Now, the beauty of a mixed shell offering is basically this. A mixed shell offering is like setting up a buffet with different dishes, right? The company can choose to serve any dish, or in this case, security, whenever it wants, as long as it's already part of the buffet or registered offering, as we've just seen. Now, why is this useful? Well, basically it offers you flexibility, efficiency, and it's cost effective as well. Now, an extra positive thing here is the timing and pricing of it. So if the company issues new securities at a time when the market is favorable and prices are high, the dilution may be less significant. However, if the market is unfavorable or prices are low, dilution could be more pronounced. Which again is why I made that point in my first video. Just because you see the word dilution or you hear it, does not mean that it's necessarily a negative thing. No, sometimes you need to look at the bigger picture. And thankfully, management here is looking at the bigger picture. Moving on here, so last video as well, this was some points that were raised, and I said, yeah, SpaceX, Starlink could be a future competitor. Now, of course, we know now that Starlink has an agreement with T-Mobile, so we've got this. August 31st, Falcon 9 delivers 42 Starlink satellites, including 26 with direct-to-cell capabilities, to low Earth orbit in back-to-back launches from Florida and California. This means that they now have 168 satellites for the direct-to-cell program. T-Mobile will have no more dead zones in the United States later this year. To which Elon Musk here replied, Starlink direct-to-mobile phone internet is exclusively with T-Mobile in the US for the first year, then other carriers thereafter. We are starting off working with one carrier in each country, but ultimately hope to serve all carriers. Now this is very interesting to me, because they say here they start the first year only T-Mobile. Then other carriers thereafter, meaning they could go with AT&T, Verizon, that's for the United States, which of course we know that they are going right now with SpaceMobile. But there's more to that story. So AT&T and Verizon have taken issue with SpaceX and T-Mobile's upcoming direct-to-cell satellite offering, arguing that SpaceX implementation will harm their respective mobile broadband networks. Filings that urge the FCC to reject SpaceX request to waive out of band emissions limits were submitted by AT&T and Verizon this week, joining similar opposition from satellite companies like EchoStar and Omnispace. Specifically, AT&T technical analysis shows that SpaceX proposal would cause an 18% average reduction in network downlink throughput in an operational and representative AT&T PCS block market deployment. Primarily, terrestrial licenses and networks must be protected from CSC interference, and operations under SpaceX waiver request would fail to do so. Now, like I said, this is quite strange, because if they want to work with other carriers thereafter, these types of things are definitely not a good step forward, right, for their future relationship, if those will even exist. But we also have arguments by SpaceX and T-Mobile. They've countered these claims by arguing that the opposition is more about stifling competition rather than general interference concerns. They assert that their technology is designed to prevent interference while providing enhanced connectivity, especially in areas where terrestrial service is unavailable. Now, currently, the band usage, SpaceX in collaboration with T-Mobile, has been using the PCS block band, specifically the ones that were mentioned here on the screen. These bands are part of T-Mobile's existing 4G and 5G network spectrum, which allows for connectivity with unmodified 4G and 5G smartphones. Now, the FCC approval and testing. The FCC has granted SpaceX experimental authorization to test signals between Starlink satellites and mobile phones using these bands. This indicates that for testing and potentially initial deployment, these bands are being utilized without needing different bands for this service to function. Why is that important? Well, because I've been hearing some folks say that, oh, SpaceX, T-Mobile, they don't have any authorization by the FCC, and if the FCC does go with AT&T and Verizon, then SpaceX and T-Mobile will not have anything or any service to launch, which is also what Scotiabank said right here. And one of their scenarios is that if the FCC does stay firm on the PFD limits, PFD meaning power flux density, then SpaceX will face, in their view, tough choices. Redesign its satellites at the risk of falling under patent enforcement actions by ASTS. Wait until 2027 for the WRC to change the EPFD limits. 3. Find other available frequencies or buy contagious blocks. Or 4. Buy ASTS through M&As. Hence, SpaceMobile could soon find itself as the sole licensed SCS player in the world's richest telecom market, giving it a precious pioneering advantage. So of course it remains to be seen what the FCC's decision will be. Now last thing here, and that is with regards to Verizon. Talk about doing a 180. 6 months ago, Verizon executives were skeptical about the direct-to-device D2D market, uninterested in using their spectrum for a satellite-based service. That was their take at the time, even though arch-rival T-Mobile was going full throttle with SpaceX and AT&T was already pinning its satellite hopes on AST SpaceMobile. Now, Verizon is bragging about how it will be the first mobile carrier to commercially launch smartphone connectivity on Skylo's non-terrestrial satellite network and be the first mobile carrier to launch a commercial D2D service offering. And no, this does not mean that they're canceling their agreement with SpaceMobile, but does show that there are other options out there. And so right now, looking at the stock, since the highs here where we are now down closer to 30%, we're also under the 20-day moving average. The 50-day one sits at $21.50, the 200-day one just under $11. On the weekly, we are still overbought. Now, again, as you can see, the stock here on the weekly has been overbought, well, since late May. So you can stay overbought for quite a while and the stock can still go up and up and up. So there you have it. That's what's been happening with AST SpaceMobile this week. That's why it went up. That's why it's going down right now. I still think it's an extremely expensive stock despite it having, well, potentially having a super bright future. I mean, the expectations for revenue growth for this year is still very, very small. But next year it's expected to explode. And the year after that, it's expected to be even higher. I think you're paying around 19 times fiscal year 2026 sales estimates or something like that. So yeah, from a sales perspective, yes, it's coming down quite fast year after year. Of course, these are just assumptions. Delays and stuff like that could hurt those assumptions. Now, right now, the only focus is the next launch. After that, we'll see what happens. Now, what happens with the stock when the launch is successful or not remains to be seen. Don't be surprised if it's a successful launch and then suddenly the stock goes down. We've seen that story play out before, right? Buy the rumor, sell the news type of stuff. Could also well be that the launch is successful, stock soars and goes back to all-time highs. That's certainly a possibility. And then, of course, you could make use of that mixed shell offering. It's all about good timing here. That's about it for me in this video. Of course, do share your thoughts down in the comment section below. If you disagree with stuff, that's fine as well. I'm here to learn about this company, so let me know down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.